Good morning. Welcome to today's Forex trading strategy session. My name is Wayne McDonald, Chief FX Market Strategist for TradersWay.com. It's 7:30 in the morning, New York time, which is approximately London lunch. Today we're going to do lots of technical analysis. How does that sound? If you have a particular currency pair you would like me to cover today, put it in the chat room. So today we can cover Forex, obviously, all the different currency pairs. We take a look at oil and gold. We can do some stock indices. We could throw down some binary options. You let me know. You're the boss. I'm your humble Forex trader. We got some requests here. Pound Aussie, Aussie dollar, pound dollar. Cream wants to do some binaries. Yeah. Why not? Let's get it started. Remember, trading and investing is a risky business, especially when you're using leverage. As an amateur trader, might not be appropriate for you. So stay small, humble, focus on the long term. Never risk money you cannot afford to lose. Good or bad, your past performance never predicts future results. So always stay conservative. All right, so we have had some price action. Are the charts good, by the way? You can see everything? Yeah, this is Euro USD. Just want to make sure. Awesome. Thank you very much. Little price action going on in here. This is Euro USD hourly chart. We got some pretty, defined price action going on where, we bounce at some moderate support. No real reason to freak out one way or the other. Now, one of the things I'm looking at here is the 21.55. 21 is below the 55. And right now, it's pulling away from the 55. Could you draw the MACD for me if I asked you to? MACD would be below the water line, and MACD would be crossing down while being below the water line. Okay? That's what I can see here just looking at the numbers. All right, so anyways, there might be a chance that this 21.55 continues to the downside. Now, we just had some news come out that, there's going to be a 6-month extension or something on the Greek bailout. And I guess that's good for the euro. But so anyways, the initial response was bounce off support. All it did was go up to resistance, and now we're stuck in the middle. Kind of inconclusive where we're going to be at the end of the day. One of the red flags here is the oscillator. It hits support and it's oversold. Okay, so we're kind of at one of these things. I don't know what the future is. If you're following the oscillator because you're a bull on euro dollar, you're going to want to find support, and you're going to want to find it oversold. It just spiked up on some new news, new information, right? Efficient market. So then what you would do is you would buy a retracement. You're at approximately 50%, 618 Fibonacci retracement on a smaller time frame, right? So you might be buying a cycle down, right? Which means you let the 5-minute come down a little bit. And then you might be buying it to the upside. Right? Sounds like a plan. That's what you would do if you were a bull. Do you think there's bulls in the market? Sure. Okay. So that's what they would probably be thinking. If I was a bull, that's what I would be doing. What if you're a bear? Well, what you're hoping then is this hourly stays oversold, it doesn't come back up to the trade zone. The only way that that could happen is that we continue mission to the downside right here, right now, at least to stay in the range. At least, okay? Oops. Okay, at least. If it doesn't do that, then it will pull the Stokes up. So, just like anything, have a bias. Okay? If you're not a bull, if you're not a bear, then you're a pig, and pigs get slaughtered. So pick one. If you're a bear, sell it high at resistance. Okay? In this case, somebody sold it right off the 21.55. That's the market resistance. Okay? And they're doing their job well. They sold it very high. They probably are jamming a stop, and they're going to try to let it break, or at least head down to the smaller part of the range. If you don't think that's happened because you're a bull and you find this oscillator irresistible potential, then you just got a 618 Fibonacci retracement off this move, right? So it's spiked up, dropped down 618. You should slingshot to the upside. It should be an easy trade, assuming you know if you're a bull or a bear. If you don't know if you're a bull or a bear, it's going to be very difficult, and it's going to seem like chaotic and a random walk. That's only because you haven't made a decision, right? Is there any debate whether that's resistance and this is support? No, probably not. So if you're a bull, you buy at support. If you're a bear, you sell at resistance. That's it. It's not complicated. It's only complicated when you haven't made a decision and you're trying to chase price around, right? That's when it gets complicated. You can look at this on a higher time frame if you wish. Let's move this to a 4-hour. You're like, Wayne, I don't see anything. Yeah, well, I'll have to change the template. What do you want? Just a standard. Okay. So what do you stink here? It's not a good chart. Okay. One of the things I look at, again, angle and separation between the 21.55. If we have nice angle and separation, this tells me that the market is bearish. If we're at 21, we're bearish and aggressive. So, starting, in December, bearish and aggressive, right? Down, 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 back to the 21. 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 Failure to make a lower low, consolidate, break through the 21, up through the 55, consolidate, consolidate, consolidate. What? Okay, so in this time frame, not a good scenario. It's not a good setup. Okay. I think if you were a bear, you sold it off previous support. Why? Because that's, I don't know, that's price action. That's what we do every day, right? There's your gray zone. And you sold it high and you're just waiting for it to break. And if it breaks, you're going to get paid. Nice. Now, if you're a bull, you're at support, right? We just talked about it. We're at support. It seems pretty obvious, right? Come on, I'm gonna grab that. I won't let me grab it. Come on, Bubba. There we go. Okay, seems pretty obvious here. So if you're a bull, go ahead, prepare to buy it. Right? And you just zoom in. There's resistance, there's support. There's a little one in the middle, and that's where it kind of gets tricky. Which one do you believe? And it comes down to how aggressive you are. But nonetheless, either buy it or sell it. Well, if you're going to buy it low at support. If you're a bear, that's the previous price action. Let me back out again. Right? There's no debate here. Old support, now resistance. Good. So you could have sold it. The only frustrating part is it hasn't moved a lot recently. Oh well, you think a central bank cares about that? Do you think, you know, any sort of longer term, medium term, investor? I mean, someone that's shorting this for the month, do you think they care about what's happened over the last 2 days? A lot of market participants just, they're not watching the 15-minute chart. They don't get fussed that it's only moved, 50 or 60 pips. They don't even care. I think a lot of people just sold it off the top here. A, they're bearish already, and B, that was actually the only resistance that we had, right? This is, you watch me do this every day, right? Over and over and over again. Where's the previous support? Now it's resistance, right? So you would have sold it up here, and that's it. You're sitting on it. You're short, and you're still short, right? And as far as you're concerned, we're moving down to the next level. On a 50-minute chart or an hourly chart, it feels frustrating. You're like, man, I went down to support and then up and down, blah, 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 blah. Look, if it's a bear, it's easy, right? If you look at this, if you double top, easy. Up in here, easy. Because all you have to do is identify resistance, right? So Nuno says if you take the 21.5, you're late. Well, it depends on the time frame you're trading and how long you're holding it. So one mistake a lot of people make is that they're watching it on a, let's say, a 4-hour chart, and they wait and wait and wait on a 4-hour short the 5A cross, and then panic on a 1-hour chart or a 15-minute chart. If you short a 4-hour 5A cross, you're probably going to be short for a week. Right? So what happens is, a newer trader will wait for unbelievable amounts of confirmation and then panic quickly. Hesitate, panic. You should also be able to anticipate where support and resistance is first and foremost on, let's 4-hour chart, okay? But don't trade the 4-hour 5A cross. You use the higher time frame simply to identify support and resistance of the market and of the trend. Do your analysis there, right? Where is support, where is resistance? At that point, you should already know, or if you don't, maybe the higher time frames like a daily and a 4-hour tell you if you're a bull or bear. But you make the conclusions, identify, so let's say you look at it and you're like, I'm a bear. Just identify 2 levels of resistance. Who cares about the 5A cross, right? Just tell me, are you going to short this? Yes, Wayne, I want to short this. Good. Give me plan A and plan B. Where are you going to short it? Give me the resistance. Boop, draw it. Done. Right? Now let's drop into a smaller time frame, a 1-hour, a 15-minute, 5-minute, whatever. The choice is yours. Now look for reversal patterns and other types of selling opportunities in one of your resistance zones. And let the pattern play out on the 4-hour, because what else does an amateur trader usually do? Set up a fantastic trade, take 50 pips, and brag about it. Even though the trade was worth 400 if you just would have stayed with the plan, right? Yeah, I got a 50 pip. Really? Because it moved 400. What are you cheering about, right? So set up on a higher time frame as far as your strategy is concerned, right? The strategy is to sell at resistance. There's resistance A, there's resistance B. Good. Drop into a small time frame, wait for price to get to those zones, and then look for selling opportunities based on technical analysis. Done. Okay? So you're not necessarily trading the 5A cross in the 4-hour, maybe a 5A cross on a 15-minute in one of your resistance zones. And then stay with the winner, right? Manage the risk at first on the 15-minute, drop a stop, let the trade start to produce, move your stop closer, get your stop to break even, lock in a small profit, and then let it run. Because the strategy is based on the 4-hour chart. Now, if it comes back and knocks you out and all you got was 20, 30, 40 pips, oh well, boo-hoo, at least you had the opportunity, right? But you shouldn't try. You shouldn't try to only get 25 pips. If you have a good strategy on the 4-hour, right, it should be triple digits. Easy. Think about it. Average daily range on a currency pair right now, 100 pips or more. So if it's Tuesday and you sold at resistance on a 4-hour chart, when the 4 hours becoming overbought and the 15-minute hourly were also coming back around, you should for 3 days. If the 4 hours is going to fall, it's probably going to fall for 2 or 3 days, right? You sell it on a Tuesday, maybe you're in it till Friday, right? What's that worth if the Euro USD is generally down for the next 3 to 4 days? Well, if average daily range is over 100 pips, you would think at least triple digits, right? Right, guys? Yeah. So that's why you set up your strategy on a higher time frame, and then you tactically enter and then manage the trade on a lower time frame. But keep your eyes on the prize. Cool. Beep. All right. So that's that. Let's move on to the next one. Okay, pig dog. Let's take this out a little. How do you want to mark this up? Is it making higher highs and higher lows? No, it's making lower highs and lower lows, but it doesn't seem to be an aggressive trend down, does it? So we back it out. Seems to me you're a candle in the wind. Seems to me we're just kind of retesting here. And I would look for bullishness. Okay. Remember, British pound is going to move this week. We talked about it yesterday when we reviewed the calendar. Okay. Question is it going to move up or down? I don't know, but it's made a higher high. This is an hourly chart, right? Would you agree that that seems? Okay. So conventional wisdom, as far as technical analysis is concerned, is to buy the higher low, which has not developed yet. So seems to me someone is great. Is it happening now? No. So you wait. Or you set it up. Now, do you want to short the dollar? Not really. So a good one is pound yen. That's the one I had earlier today, right? Now look at this. This is a 4-hour chart. Monthly central as support. 21 EMA as a dynamic level support. Okay, not far from a roll reversal. Okay, right here we have a 3A2 weekly central pivot point, and then here a monthly central pivot point. But do you remember the example we just covered on a different currency pair? How it went up, 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 down to the 21, up. I think it was down the other way, right? Down, back to the 21, down. Same sort of thing. Look at this, triple bottom, big bold move, higher than that previous high, down to the 21, higher high, down to the 21, higher high, down to the 1, long and strong. Okay? Especially with pound dollar at support. So if pound dollar can kind of start moving up here, then pound yen has a pretty decent chance to head up further. Okay? It's very key that we get through the weekly 3. The reason that's important is that currently the EM3 is the top. So if that ended up being the top of the week, let's say right here, right now, we just hit the top of the day for pound yen. Let me zoom in. Let's just say this thing drops like a ton of bricks. Let's look at it on an hourly. Okay, let's say this thing reverses right here, right now. It's very important, first of all, because it's a double top. But second of all, because it's weekly M3, we already have a top defined, and now a double top. That would predict a drop to the M1 and that down here. Okay? So if this reverses right now, the target's going to be down here. Is that my opinion? No. I'm just telling you what pivot point theory suggests. Okay? If we make a higher high and continue the uptrend, then this thing should be going to the R2. R2 is here. So let's take the, well, we'll do it here. Basically here. Which one is it going to be? Well, I think what happens right here, right now is going to be critically important. Okay? If it drops and then bounces here at R382, what is it, 79.50, so it's a midpoint cyclable roller, so that might be my plan B. Plan A, long it off the monthly central. Plan B, long it off the weekly central, the 382 Fibonacci retracement, the midpoint cycle level with the Stokes kicker. Goes any farther than that, time to take a walk. All right, time to go to the pet store and stare at fish. Okay? So we'll see. Think what happens this week as the British pound should move based on the event risk we saw on the calendar yesterday. If you missed yesterday's video or any of the videos, they're all on tradersway.com. Feel free to watch the videos and go over it again. The pound is expected to move this week. Okay, so if pound dollar hold at its support, pound yen could be the better one to trade. Because I'm fundamentally bullish on the US dollar, why would I want to sell it? I'm fundamentally bearish on the Japanese yen, so I do want to sell it. So if pound is going to turn strong, and we have a British pound event, this might be the one to be on. And you can see in the last, 12 hours, it's moved its way up pretty nicely. Okay? See how one thing leads to another that leads to another? Let's check out some commodities. By the way, that rumor that was released earlier that there was going to be a proposal to extend Greek debt, someone else has come out and said that and denied it. The euro went up, the euro came down. I'm now only down 10 pips from where I was before. So again, I was up 200 pips, and all of a sudden that rumor came out, and I was setting up the webinar and stuff. It didn't take me long, and I looked at my positions, and now I was only up 100. So I lost 100 pips in floating profit. And now it's all been denied, so another 20 minutes goes by, and I'm basically very close to what I was before. It was all for naught. All right, so let's go over this Kiwi. Okay. Pretty chart, pretty defined. Okay. Why do I have this gray zone there? Well, because if price goes up there, I'm going to sell. Well, did you know about that? Okay. Where are we now? Let's zoom in a little closer. Use the bionic eye. Look, we already have this marked out from previous trades. This is a sell zone. Well, how about, let's say it differently. This is resistance. It's too bad it's fallen. Well, maybe give it some time, right? So we'll see what happens. 2155 is dead to me. There's no market. It's moving sideways. There's no trend. So, you either sell at the top and buy at the bottom, or just wait. Nothing wrong with waiting. Right? You don't get paid to trade. You get paid to do your analysis and enter your trades successfully and let them run so that you profit. Right? Waiting is a strategy. Okay? So what do these moving averages represent? Well, the 2155 represents the market. If price is below the 21, I'm bearish and I'm aggressively bearish, right? Down, 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 back to the 21, down, 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 back to the 21, down, stop, reverse. Am I aggressive? No. In fact, there's no market left. That's why we use these moving averages. This spike wasn't supposed to happen. Now that it's happened, I don't know where we're going. Are we going up to the 200 MA? Yeah, maybe. I don't know. I don't know. That's the whole point. So now you need to adjust. Over here, I'd be aggressive. I'd sell this over and over and over and over again, without hesitation. Here, I don't know. Okay, I don't know. I don't know. It just doesn't look that good to me. Those are just the different markets opening. So, I don't know. Just wait this one out a little bit. Okay, if you want it to come down, at least wait for it to cycle down. Wait for it to hit resistance. Maybe hourly cycles. Obviously this is much more likely to be resistance than support. So you could have shorted it pre-London. You had the oscillator, you're at resistance, trade it in the direction of your bias and just keep doing it over and over and over again. Jam your stop, take a walk. It's your call. Or find something better to do with your money, right? Let's do the ultra reliable Canadian dollar. Hey, Sharon. Yeah, I mean, come on. It's Canada. Can't get more reliable. All right. Is this a reliable trading pattern? No. Seems like we're in some consolidation. Some pretty clearly defined support there. Some sloping resistance. You know, blah. Yeah. It might be forming a J-Lo, if anything. And then you take it this way. Do you guys know what a J-Lo is? A big, wide bottom. Okay. So essentially it's coming down, right? And then moving sideways, and then maybe up. Okay, just remember that. A J-Lo is a big, wide bottom. Beep. So you can look at that saying, yeah, I'll wait. Okay? You know, at least this apex, if you want to look at it that way, let's zoom back in, put everything in context. You can at least wait for the apex to break. What's the apex, Wayne? Okay, you take a current high, current low, make an apex. Okay? Wait for that to break. And you want it to break as close to the corner as possible. The tip of the spear. If it breaks early, it's on an unreliable break and potentially a fake out, not a breakout. So the closer it gets to the apex, the better. And I don't really care if it breaks down, then I can look for pullbacks. If it breaks up, I can look for pullbacks. You just let it happen. Can you see it now? You can draw it any way you want. I mean, it's, you know. Once it's done, I can't adjust it, right? It's hard to see. But anyways, can I? Nah, just too difficult to grab with all those lines. So anyways, you can draw it any way you want. Right, you can see you could take it much farther than that. Like maybe you can add it like this. Well, it's gonna go I don't know. Whatever. Just draw it, you know, and see it and let it break. One of the messages I'm trying to give you is that you don't have to be the one that breaks it. Okay? Let's do Aussie, and then we'll go into some commodities and currencies, and I mean commodities and indices and energies, and so we'll do the intermarket. Does that sound like a good plan? Okay. We planned it down here and waited, you know, made a 618. I think that is very sellable. Even though it didn't work out, it doesn't matter to me. Okay, this would have been very sellable. Drop, jumped up, did it again. The interesting part is we never broke the 786. It always stayed bearish. So now we've made a lower low. So this gets a little tricky, but it's still tradable. Let me show you what I'm thinking. Okay, very defined support. And I would use this area here as resistance. Let me draw it for you. Okay. And let me get rid of the fib. Okay. That's how I play it. Sell it high for all to see, ride the 2155 down. Okay. Yeah, you can see I already had this identified as resistance, so you just have to take it out farther. So yeah, it seems to me, look at this big old plan that we had on the higher time frames. You can see the little lower ones. Let me zoom in here. We had 3 plans, plan A, plan B, plan C. You can see them here. Oh, let me see what we did for a second there. There, you can see the different plans. Plan A, right? Drop, up and down. It went a little higher than drop and went up and down. Plan B was the next one, a little higher than that. Sell it off of here. And then this third one was even farther back. But nonetheless, it did. Right, so always keep your eyes on the higher time frames. So it came up here and is falling. So if it fails to make a low soon, like in the next couple of days, it's probably not going to do it. And then what you do is readjust your expectations. You readjust your strategy. If it's not trending, then it's consolidating. Then you use a different strategy, you use different tools. So for example, if it's consolidating, do you use Fibonacci? No. Right? So that's why you do this. You ask yourself, are we trending, in the moment? No. Is the market aggressively bearish? No. You can look at the moving averages or you can look at MACD. MACD is moving back toward the waterline. That's not bearish. Okay? So if it's got to fall soon, right? If it doesn't fall soon, and if I'm a bear, I'm going to use this way up here as the macro fib, and I'm going to measure the whole low, the current low to the current high, and I'm going to sell it somewhere between the 50% to 618 Fibonacci retracement. Okay, so basically a trip back to 80 and then drop it like it's hot. Now, a little history lesson. Last time the RBA told us that the Aussie dollar was worth 75 and we were at 85. Last time that happened, it dropped down to 75, and then Governor Stevens didn't back up his word, and it went from 75 back to like 83 or something. And then finally it dropped again. So I don't want to say it's going to happen. I don't even want to think it's going to happen. But if history does repeat itself, we're going to go from 77 probably all the way up to 82. And what would start that move? Well, Governor Stevens talks this week, right? Was it Thursday? And he could come out and blow it. He could screw the whole thing up. Say, uh, we're never going to cut interest rates ever again. That would be it. But is that likely to happen? Probably not. Are you guys, one of the things we talked about yesterday is the importance of the Chinese data to the Australian economy, right? Did you guys trade Chinese CI? It was bad. It was bad. So what's Governor Stevens going to say? Oh, well, the Chinese economy is recovering, so Australia should be made in the shade? No, not at all. So, but he could still screw up for a few months and then talk it back down. All right, so who knows? Yeah, so be careful, right? Yeah, China's in trouble. Why? Because it took the ECB so unbelievably long to do what was obvious that it actually was, almost bordering negligence because it was hurting other people, other countries. So now we finally got the ECB on the clue train. So maybe, when I did that microeconomics, I don't know, lecture last week, it discussed how the money trickles through and how long. So we need, let's say, 6 months to a year before we start seeing some decent, improving numbers out of the Eurozone. And that should eventually, trickle down to China. But we're talking like in a year. So it could be a bad year for Australia, right? So we'll see. I don't think Governor Stevens is going to come out and say anything good. So therefore, I still am interested in settling the suck eye. Okay. So the next move, if I were to guess, would be like this. Okay. That's what I would say technically. But I think when you're with an event like a speech by a central bank leader, anything could happen, and it could be up, down, sideways, and then down. Who knows? But technically, you would plan it out like this if you're a bear. That it did drop it. Well, it went up, touched the role reversal. Okay, here it is. There's support, now resistance. Okay, dropped, made a lower low, rose, made a lower high, dropped, and then even on a smaller time frame, not a 4 hour, but even smaller, retraced 50%, then should drop, break this resistance, back, retest, drop, test this, right? Should retest again and then drop again. That's how you'd plan it out technically. But we know the event risk's fundamental coming up, and there could be a noise in there on the short term. On the longer term, I would say this can continue to drop. Why not? What would change it? I mean, look, their largest trading partner is in serious trouble. Commodity prices are expected to stay weak. The RBA says the Australian dollar is still overvalued on historical terms. And they're in a policy of not just being dovish, but actually cutting interest rates. So here we are at 77. Why not 50? What's going to change the trend? I don't know. Well, that's our job. Okay. Let's go to the intermarket. Wow, the yen is really weakening. Wow, I just looked up at my positions and boom, thumbs up. Hoo-ha! I have a couple of QEN trades that just skyrocketed. Yeah. All right. So anyways, let's start with gold. Okay. You can see yesterday we got pretty close to a gray zone. Seems to me a gray zone in a downtrend is a sell zone. Yeah, a little higher would have been nicer. Okay. Looks like it was basically a 3A2 Fibonacci retracement. Pretty easy trading, right? You don't have to be a rocket surgeon to see that one. Pretty basic 3A2 Fibonacci retracement. The thing is, it looks like it's going to fail. So I'd say up to 1250 and then drop up there. Okay. But it's fine. So I'd sell here at the 3A2. Next one's going to be a 618, but it's closer to the roll reversal and a midpoint cycle up. So even better, right? So if it did this, I'd still sell it. It's fine. Wouldn't bother me one bit, one iota. Okay. Next, crude. Let's see. Isn't that funny? That looks good though, doesn't it? Doesn't that seem like that's plausible? We talked about it middle of last week that this could go all the way. And then what? Sell, sell, sell. Yeah, why not? Okay. Igor says, with gold, you have such a high average daily range right now that you need gigantic stops and stuff. Yeah, trade a binary. S&P 500. This gray zone was, was our can't possibly fall any farther area. It's our like panic zone. It's like our Alamo. So very, very glad that that's stabilized. It was unthinkable any lower than that because it was such a big drop. So at that time, in our strategy sessions, we were talking about how in equities there's a prevailing wind because many more market participants make money when the stock market goes up than down. Probably only 10% of the market makes money on the way down. 90% of the market makes money on the way up. Okay. So anyway, so everybody really wants it to go up. So we came up, tested the first confluence of resistance. That has now become our pivot profit zone, and we're touching that now. We're getting pretty close to that weekly M4. But guess what? Stoke Kicker says this can be up the rest of the week. Okay. So let's go into a little smaller time frame. So maybe you're buying dips on the 15-minute chart. What do you think about that? Igor, you're saying the vast majority of market participants in the S&P 500 make money on the way down? I can't believe that even for a second. Oh, I see. All right, so anyways, how about buying dips on the 15-minute? Is it at support? No. Is it at resistance? Yes. Where would you rather buy it? Oops. Oh, we already had that. Oh! Where were you 20 minutes ago? Of course, there was another one down here even better, but we're pretty range bound, but that's still the better trades is the breakout retracement second chance trade. Long and down, long and gone. Yen is just good. There's a daily pivot just above this too, I think. Yeah, there it is. Lovely, man. Smoking hot. I love it when the yen weakens. Time is it? It's been about an hour. Are there any last questions for today's strategy session? We'll have tomorrow to look forward to as well. If I didn't get to a particular currency pair. No, Zeal. It's not my call, not my decision. It'd be, to me, it'd be a total waste of time that we've wasted all this time and money. If I was German, I'd just be livid. What a waste of time and money that was. But, you know, if they're kicked out, portfolios will need to be adjusted. Holy smokes, yen just moved again. Nice. Woohoo! Go, 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 go. Look at the pound yen, guys. Holy smokes. What a good trading day. Lufle till your mom. Anything else? I'm happy to cover it. How can I help? Just maybe save it till tomorrow then? All right. Well, peace on earth. May the pips be with you. May your profits be above average. I hope these strategy sessions are informative and helpful, maybe even a little entertaining. I hope you look forward to them every single morning. Jim says, God bless me. Well, thank you very much. But the way to you need to fund a live account. Let's put it that way. We start at 7:30 a.m. in the morning, Monday through Thursday. Okay? Please fund a live account. That shows Trader's Way is making a good investment into you, and that these sessions are helpful and maybe even critical to your success, and that's what I'm hoping for, that I'm making a difference. So pay it back, fund a live account. Trader's Way is making the investment into you up front, giving you the education, training, and support you need to be a success in the long run. They want to be your long-term partner. So pay it back when you can. Keep these sessions going. So again, peace on earth. The world needs that, man. Peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Cheers.